Hello, welcome to Save U.S. Taxes Legally. I want to teach as many U.S. investors, U.S. business owners, U.S. entrepreneurs, U.S. franchise owners, U.S. professionals, U.S. tradespeople, people who make 1099 income, and also self-employed. This is information that is not taught in school. The Spendthrift Trust comes from England way back when King Henry VIII started the Church of England. That famous king who chopped off his wives' heads. The lords and ladies of England went back to the 12th century to the Magna Carta and said, oh, no, 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 King Henry VIII, you can't do this. It's contract law that came from England to the colonies while we were still part of England. The law firm I work on behalf of inherited a trust that's going to turn 365 years old in 2025. We just had our 250th birthday. So have pen and paper, to have your cell phone, take pictures. Are you ready? Let's share my screen. Now the Spendthrift Trust is going to save you federal and state income taxes. Keep your information completely private and no judgments if you are sued. Oops, go down. Next one. Now this is the 2026 federal income taxes. There's 4 ways to file your taxes. Most people are unaware of this. There's 7 different layers. The more money you make, the more you pay in taxes. Single is the most expensive way to file. Then there's head of household. You're divorced with children, 18 or younger, living in your household. Then there's married filing separately. And then the cheapest way is married filing jointly. Now, ladies and gentlemen, if you get nothing else from this, look at what's happening in married filing separately. It is the same tax rate as single all the way up to 35%. It does change at 36%. If you compare it to married filing jointly, it's double. As married filing jointly, you save double the taxes. If you are married, please file jointly. Now, if your CPA or your financial advisor tells you, ooh, the IRS wrote a memo, they did. It was dated August 9th of 2023. The IRS literally says they do not like tax code 643B. They do not like the Irrevocable, Complex, Discretionary, Non-Grantor Spendthrift Trust. Sounds like a Dr. Seuss book. That's okay. The IRS cannot change the tax code. Only Congress can. Too many presidents, too many senators, too many congresspeople, and their super PACs know the secret of the rich. This comes from England. It's in the IRS Tax Code that went into effect February of 1913. The super rich families of 1913, the Rockefellers, the DuPonts, the Carnegies, and the Kennedys made sure they could save taxes. Well, if they can save taxes, we can save taxes. Now, you do need all these 5 elements. Irrevocable means it goes from generation to generation to generation. The Rockefeller Spendthrift Trust is called The Office. It's 7 generations old and has over 400 people under the same EIN. So each individual family files a separate 1041 tax return. Their money is not commingled. Complex. This trust can hold money from day to day, week to week, month to month, year to year, decade to decade, century to century. 95% of the trusts sold every year are what's called the family trust or the living trust. My mom and dad had the family trust. It was called the Gimmon Family Trust. Susie Orman talks about this on PBS television. This is not your mom and dad's trust. This mom and dad's trust or living trust avoids probate and then dissolves and goes away. It's revocable. This trust saves you federal and state income taxes and leaves a legacy, keeps your information completely private. All lawsuits become frivolous and go away. And if you're over 65, you don't have to pay the IRMA surcharge on parts B and D. Discretionary. Whoever is the trustee or trustees can make the rules for the beneficiaries while they're alive and then also from the grave. There's no infighting, there's no contesting the will at all. Non-Grantor. This makes the trust completely private. When you start either the Business or Beneficial Spendthrift Trust, you will have someone who will never be a beneficiary, who will never be a trustee, sign up as your grantor. You will need their social security number. This is not going to be a speed bump. If you want me to do that for you, I've done this for many of my clients. And then finally, the spendthrift. This is, there's 2 pages of case law that shows that this is legal and everything else. If you need the case law, please put your email into the chat and say case law, and I'll make sure I send it to you. Now, Paul Benson wrote 5 specific trusts to save specific taxes. Today, I'm only talking about the business trust and the beneficial trust. The business trust is for anyone who makes 1099 income. I'm sorry, W-2 income earners, when you get your paycheck, your taxes are taken out before you get your paycheck. Google says 35% of you W-2 income earners have a side hustle. That was me in 2019. I was working as a Medicare broker and I wholesaled 7 properties. This is an actual contact of mine that I met at a BNI meeting. He's a North Carolina accident attorney. He's married. The 2 of them make $275,000 a year, saving all federal income taxes of $51,196 and all North Carolina state income taxes, which are taxed at 3.99%. They would save $62,168 in 2026. Now, he didn't start this trust until May of 2026. So per month in May, June, July, August, September, October, November, and December, each month he's saving $5,180. He can put this back into his law firm. They can pay off their mortgage. They can buy a new vehicle. They have 3 children. One's in college, 2 are in high school. They can start college funds for them. They can go on a family vacation. They can give to their favorite charity or save for retirement. This, again, because he's leaving a legacy, his children and grandchildren will be able to be part of this trust too. Now, my personal story. I became a real estate investor in 2018 when my mom got sick, 2,000 miles from home. In 2009, I'm sorry, I became a real estate investor in 2018. I said that wrong. When my mom got sick, 2,000 miles from home. In 2019, with my mentor, I wholesaled 7 properties nationwide, paid off all my debt, and supposedly I was a rock star in my real estate group. Remember that Super Bowl commercial, "You're not a rock star." On April 4th of 2020, my CPA called to say congratulations. I had 6 notes. I had done my K-1s for March 15th to put into my taxes for April 15th. And he said, "You made so much money, Sally. Your tax bracket went from 22% to 24%, and you now owe $94,000 in taxes." It was COVID. I had $50,000 saved. His solution, set up a meeting with him, get on a payment plan, pay interest and penalties. My solution, research how the rich save taxes. I had read an article about the Rockefellers Spendthrift Trust, and it took me 5 months to read it. Now, a great book for you to read is The Power of Your Subconscious Mind. I went to bed on April 4th, 2020, crying. Power of Your Subconscious Mind was written by Joseph Murphy. His idea is put a thought into your mind, and you'll wake up in the morning or after your nap, and you'll have a solution. I woke up on April 5th knowing I was going to contact my girlfriend, whose boyfriend did HELOCs and paid off houses. I had paid off my townhouse. And then I had read the article in the Rockefeller Spendthrift Trust. I paid off my tax bill. And then in July of 2020, in my real estate group, this contract for this house in Rocky Mount, North Carolina, was offered for $20,000. It was going to go to auction for $50,000. I knew that with my trust that I would have to pay $7,200. When it finally went to auction at $64,326, I made $44,326. And I got to save $10,368. Now, if you're going for the beneficial trusts, you're going to save short-term capital gains, which are between 10 to 37%. You'll, if you're a wholesaler, if you're fix and flip, if you're doing auction houses, tax liens, you're selling crypto, you're doing options trading, or you're a Forex investor. Long-term capital gains, we'll get to the next slide. You'll stop paying interest income taxes between 10% to 37%, depending on your tax bracket. If you're a passive investor in mutual funds, if you are doing subject to real estate, the BRRRR strategy, I have notes where I'm the paper on the house. People pay me their mortgage. creative financing, seller financing, or forex investors. You're going to for that. You're going to also pay all the taxes at 50% or 100,000%. Now, this was a tax lien for $7,000. I sold for $100,000, and I got made a program for $93,000 in capital gains. Now, long-term capital gains are either 15 or 20%. So this is an actual company that was being sold for $2 million. He got to save either $30,000 at 15% or $400,000 at 20%. The gentleman did buy both the business and the beneficial trust because the people who bought his company were also going to pay him $3,000 per month, so he wouldn't have to pay federal state income taxes on that. Now, IRMA, this is something that the IRS looks at. Every October, they go back 2 years. So October 2026, they're going to look at 1040 tax returns of 2024. Your supercomputers are going to take whoever's on Medicare and add everything together. How much you're getting from Social Security, how much you're getting from pensions. Are you working? Did you do a 401k withdrawal or a SEP withdrawal? Do you have capital gains that you're making? Interest income taxes, dividend income taxes, interest income taxes or rental income taxes or royalty income taxes added all together. Now, this is the chart from 2025. I haven't seen the chart for 2026 yet, but if you are single and make more than 109,000, or if you are married and make more than 218,000, you are going to pay a premium on parts B and D of Medicare. One of my clients in 2025, a husband and wife, who I was going to save them $72,000 in dividend income taxes. I asked them if they were paying the premium. She said they were paying over $600 a piece. So $1,200, almost $13,000, $1,300 per month. I told her I can get her down to $185 per person, or if we look at it that way, let's call it $350. So they got to save about another $700 a month just because they started the Beneficial Spendthrift Trust. Now, if you would like to set up a free 30-minute tax breakthrough session with me, it's www.thetrustisyou.com/scheduling. When you sign up, I'm going to take you out to a free website called NerdWallet, show you the formula for federal taxes, find out what state you live in, and then figure out your state income taxes. I will send you an email with this information, and then you can decide when you want to get this started. I do have a class on the Great Discovery. When you go out to The Great Discovery, you're going to register as a free learner. My class is called Save U.S. Taxes. There you're going to get a presentation like this. You're going to get 3 articles from Forbes magazine I did not write, 2 pages of case law so you can research this to your heart's content, and then examples of clients saving thousands of dollars. My goal is to teach this to as many people as possible because so few people have ever known about how they can save taxes. I appreciate you watching my video, and I hope you enjoyed it. Take care.